This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin. That's a lowercase b for the currency and a capital B for the network. This is a collective journey to understand, apply, and use this innovation. It's all Bitcoin all the time, or at least for the next 15 minutes. I'm your host, Lawrence Lewitinn, filling in for Christine Lee. So let's take a look at the Bitcoin price index, the XBX. Is currently trading at 38,482.66 or so, down about a little under 4.3%. And now let's take a look at our chart of the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
This is a really ugly chart. It's the returns of 14 out of the 20 CoinDesk 20 assets, digital assets, and this is so far in April. Look how horrendous this is. Ether is by far one of the better ones. It's down only 31.6% or so. Bitcoin, 35%. You go all the way down. You're looking at things like Matic and XRP. Even Doge, even despite, you have Elon Musk buying Twitter, it's not on this list here, but Doge itself, oh yeah, there it is. I apologize. Doge down 51%. So this is a terrible chart. And this has been the past, this has been April. So, I apologize. This has been over the past year. So it's really not been a great time. And this, at the very least, shows how things have been going. So joining us now is to discuss the markets in our weekend review and other Bitcoin news is our weekend review panel. We have CoinDesk Managing Editor of Technology, Christie Harkin, and she's in Toronto, and Managing Editor of Markets, Brad Keoun, in Austin. Good morning. Afternoon.
It's morning somewhere, Lawrence.
It is indeed. It is. Well, we had a lot of crazy hot stories, but some very strange reactions from the market, right? Fidelity, they're allowing a 401k program. And the thing is, the Bitcoin didn't react this week, did it, Brad?
Not really. In fact, over the past week, it's down about $1,000, which is not a big deal. For Bitcoin, I mean, we're here 38,000-ish. And over the course of the week, we went up a little bit above 40,000, and now we're back here. So, the Fidelity news, I mean, long-term, definitely bullish. Again, it's just another giant financial firm taking another step toward crypto and making it easier for people to invest in Bitcoin. So that is definitely a bullish announcement. In the past, it might have pushed, you're right. I mean, it might have pushed up the price, but, maybe a lot of that, I guess in hindsight, what the market is telling us is kind of that was maybe priced in, or maybe there's just other things going on.
And the interesting thing about Fidelity, of course, is that it has, it's one of the big players in Bitcoin custody. So in many ways, this wasn't a big leap for them to do all this, right? They already have some of the infrastructure there. And also, Christie, any thoughts on Fidelity here?
Not really. For me, I focus more on the technology. So for me, when I see companies like Fidelity getting involved, when we see Swiss banks talking about not having it on their balance sheet yet, but potentially in the future, I think that a lot of that is deep down, I like to think that it's because they're starting to understand the value proposition of Bitcoin as a technology and not so much looking at whether the numbers are going up and down, but what the long-term future for an asset like Bitcoin and compared to any other crypto that's out there.
Speaking of technology, we have a very interesting, of course, week in the tech space because you have the world's richest man who made a lot of his money in electric cars, of course, and space and the likes, Elon Musk, pretty much almost has a deal with Twitter, or he has a deal in place, but he hasn't quite closed yet. The market is right now pricing Twitter slightly below the deal price, so it provides, or not slightly, it's about 10%, I think, is right now the spread. So it provides a bit of event arbitrage opportunities here, potentially, if the deal goes through. But is its impact good or bad for Twitter, Christie?
Well, I'm not holding my breath
Bitcoin,
that it's. Yeah. I'm not holding my breath that this deal is going to go through in the first place. There are rumors even that he might be backing out of it himself, which is very musky. So that's a possibility. There's still some rubber stamping that may or may not happen. So I think it's kind of meh in terms of whether or not this is going to be a Bitcoin sort of thing. I think that it might be interesting if he chooses to integrate some sort of lightning tipping payment system, but who knows? Like, Elon Musk is nothing if not unpredictable. So I'm not sure that Bitcoin cares, except that some Bitcoiners may be more concerned about some of the other overlying issues like privacy, like identity and how that's going to work, like censorship, because these are all important ethical questions for many, many Bitcoiners who aren't so tied to the price. So that's the only aspect, I think, where it's really that big a deal for Bitcoin. I think it's more of a meme token effect than a Bitcoin effect.
But you think, nonetheless, if the deal doesn't go through, that nonetheless there has been at least some of the discussions that you just mentioned, particularly on privacy, particularly on expression, and particularly on getting rid of those spam bots that Twitter has been plagued with. It doesn't seem like they have their act together in a lot of ways. And then you also have, of course, the whole thing of verified accounts, and maybe making that more of a thing than it currently has, where any horrible person can sign up. Brad, your thoughts?
Well, I mean, in general, I guess I would say I sort of agree with Christie that there's a lot of questions on whether this deal will actually go through. It seems like, most importantly, the employees, as far as I can tell, are revolting against this deal. And, the board of directors of Twitter is going to have to make the decision on whether to go through with it. And they have to consider, their stakeholders broadly read, not just shareholders. They have to worry about the employees and what, just like a lot of companies, it's a tech company, but, the people are the assets, right? And so, clearly this is another play by Elon Musk to sort of, it's ostensibly about free speech, but it's also about attention seeking and Elon Musk, trying to make himself at the center of attention. But he's been in the past, Tesla has bought Bitcoin and he's made that a pillar, and who knows if it were a private company, if he might do something like that. And, the speculation, I mean, to Christie's point, it's about Dogecoin is kind of been Elon's number one thing, and whether Twitter would somehow allow payments with Dogecoin. So a lot of questions, like probably too many questions here to really trade on this.
So, we kind of have to get to some of the other topics because there have been a lot of stories. Of course, the Central African Republic, Centrafrique in French, they have adopted Bitcoin as legal tender, and this is the second country to do so. As I noted in First Mover the other day, what makes it interesting is that the two countries that have adopted Bitcoin as legal tender, it's now El Salvador and Central African Republic. Both of them don't have their own currencies. El Salvador uses the U.S. dollar, and Central African Republic uses the franc. It's a Central African franc, which is based off the euro. So, does this tell us something about the sort of the countries that will adopt Bitcoin potentially as as legal tender? Is it something about not being in control of of your currency anyway, of your monetary policy anyway, and taking on Bitcoin? What does that tell us, Brad?
Well, I have done a lot of reporting on Ecuador, which uses the dollar. And that was always, a big, and again, the reason they adopt the dollar in the first place is because they don't trust themselves to, implement a strict monetary policy. In many cases, these companies have experienced hyperinflationary periods in the past. And so they've essentially outsourced their monetary policy to a central bank that is, maybe is an external influence, and can't be influenced by domestic politics. And so, El Salvador, using the dollar, essentially, outsources its monetary policy to the Federal Reserve. And here, to your point, the Central African Republic is effectively pegged to the euro. And so, that they've already crossed that Rubicon, of outsourcing the monetary policy. So in some ways, Bitcoin is just diversifying,
And now, one thing that's interesting, Christie, this is, of course, Payments Week at CoinDesk. It's the last day of Payments Week, which, we should all celebrate as a national holiday. There is a piece that was done recently by our own Georgian sage. It's called a brief overview of crypto payments in 5 charts. And there's one chart that you're looking at right now, correct?
Yeah, well, there's a few that we've been keeping an eye on, but one of them is the public Lightning network capacity. And what this chart is telling us. So first off, if you don't know, the Lightning Network is a second layer that's built on top of the Bitcoin blockchain that actually kind of offloads it can offload payments in a nearly instantaneous, fee-free manner. So instead of every payment, like your cup of coffee, for example, having to go onto the Bitcoin blockchain, which can get very expensive, and Bitcoin just can't process that many transactions all at once. We have a very limited block space. So by offloading those transactions, you can have all kinds of payments happening in this second layer that are open. It's like you open a channel, you run all these payments, you close the channel, and you finally settle it on the Bitcoin blockchain. So all these payments turn into basically one transaction on the actual blockchain. But what has to happen is you have to have liquidity. You have to have capacity on that second layer, on that Lightning Network layer. And the more Bitcoin is committed to that capacity, to that second layer, the more payments are available to go through, the more routes there are for payments to go through. So you might have a channel that has, say, $1,000 worth of Lightning capacity. So you can run $1,000 worth of payments through that channel. And then maybe it will connect to a node that has another $1,000 or $500. And you can break these payments up and you can send them all over the place, hopping from node to node, depending on the capacity. And the more capacity there is, the easier it is for these payments to find routes from where they want to go, from where they are to where they want to go. That's a really rough sort of slapdash explanation. And you can find out way more about the Lightning Network on CoinDesk. But what we're looking at with this is the fact that the Lightning Network capacity has really spiked. There's a lot of Bitcoin being committed to the Lightning Network that is allowing for these payments to happen. And that is just one level of use that we're able to measure on Lightning. It also tracks usability. One of the things about the Lightning Network, unfortunately, is it's not particularly user-friendly yet. It's getting there. But having all this capacity is just one more hurdle that is more easily overcome when you've got all this capacity on the network. It also shows participation, that it's becoming more popular as well as more useful.
Yeah, in our limited amount of time, we're taking a look at the end of we're at the end of the week now. Let's take a look at next week. Brad, what are you keeping an eye on?
Well, to your chart at the beginning, we're sort of closing out April here on a down note. And so we'll be going into May and see what that brings. But nothing in the charts or nothing in the news necessarily would suggest that we're setting up for any particular breakout, or maybe that's the question, is whether we're going to break out of this range we've been in, kind of between the mid 30s and the high 40s. We're kind of still right in that range that we've been in for the past, at least 6 weeks or so. We do have the Fed meeting coming up next week. Basically, Jerome Powell, the Federal Reserve Chair, has basically already told us what he's going to do. They're going to raise rates by 50 basis points and announce the beginning of the roll-off of the balance sheet at a cap of $95 billion a month. That's kind of already priced in. People are really betting on the meetings for the rest of the year. And so probably, people will be watching that meeting to get clues for that, how fast the Fed's going to go and how worried they are about inflation. So yes, that could be a factor in the Bitcoin market next week for sure.
Certainly. Christie, how about you? What's on your timeline here?
Well, I think what I've been really interested in watching this week to see if this continues and over the last few weeks is, as we've talked about, the price of Bitcoin has really sat either in a range or gone down, and everyone's sort of looking at it going, well, maybe this is the thing that's going to move the price back up. Maybe this is going to go back up. And it hasn't really been doing that, which is fine, because what's really been interesting to me is watching how many outside players are still piling in, that you're still seeing investment. You're still seeing people with an expressed interest in integrating Bitcoin, whether it's for their 401ks or holding it on their balance sheet. And they're not looking at the price going down as a bad thing. They're not looking at, I think that the lack of volatility that we're seeing, for Bitcoin, that fact that it's been just sort of coasting along and not doing anything too wild, maybe that's a thing. But the fact that price isn't moving based on this one announcement or that other announcement, I think that's been super interesting to watch. And I don't actually care too much about price. So watching who else is not caring too much about price and still wanting to hold Bitcoin or get involved in Bitcoin or explore Bitcoin, that's what I'm looking forward to seeing. Who's next week?
We'll keep an eye on that. So thank you both. Have a great weekend. That was our CoinDesk Week in Review panel. So Managing Editor of Technology, Christie Harkin, and Managing Editor of Markets, Brad Keoun. And that's all about Bitcoin. I'm Lawrence Lewitinn. Christine Lee will happily be back on Monday at 3 p.m. Also, join both of us, Christine and I, Monday morning, 9 a.m. in New York for First Mover. Your first look at the day's global crypto news headlines. You're watching CoinDesk TV.